Please remember, none of this is financial advice. I have a bias towards the XX network. Efficiency is doing better what is already being done.
A point, I don't know whether it's 2 years or 3 years from now, where you will not think of a world that's in the old rails. It will be in the new rails. It will be in the new rails. It will be in the new rails.
The financial system is going through a significant transformation. The old system, which relied on IOUs and paper contracts, is being replaced.
What I can say is in terms of timing is I've been working on this for 5 years. So 5 years ago, nobody knew what it was. If you look at the banks today and the big asset managers and so on, each one of them has a team of anywhere between 20 and 400 people working on deploying tokenization-based solutions and infrastructure. It's a long build. So 23 is the year where we're building this, where we are going to have some water in the pipes, basically. Some initial deals, some transactions that you're seeing here and there, but institutional grade. What we've seen before was non-institutional grade assets going to retail and things like that. What we're going to start to see, just like KKR, but others as well. I had a conference in December, which I call the Asset Managers Are Coming. You know, we had Hamilton Lane on stage in Aberdeen and you know, the likes of BlackRock are in the market, the likes of Vanguard and so on. So JP Morgan, as I said, Goldman Sachs, Citibank, they're all working on it. So 23 is the year where we're building the infrastructure. 24 is the year where it can start to scale. But like any digital revolution, once it starts scaling, it's quite exponential because it's very easily replicatable.
We are still early. This has just begun. The institutions are still building. They haven't even put the waters in the pipes. The person speaking is Ami Ben David. He's the co-founder of ONRA. The vast majority of assets in the world are private, and the market has been growing twice as fast as the public market, yet it remains mostly offline. These are some of the metrics from his webpage. $317 trillion that potentially could be tokenized, $250 trillion in debt that could potentially be tokenized. And this is just financial instruments. Blockchains open up various use cases. We're going to open Pandora's box as the technology evolves.
Beauty of a revolution, I do think this is as big a revolution in my career as, and you used to be a Morgan Stanley as well, no?
Long time. Yes.
Yeah. So anyway, what I say is this is bigger than the revolution that made my career, which is finance globalizing. When I joined Morgan Stanley, it was a small investment banking boutique, private company, 1,800 people, 3 offices. When I left in 2007, it was 60,000 people, had offices everywhere. That was a revolution. This is as big, if not bigger. I call it a Cambrian explosion. So before we get to the Larry Fink definition, for me, giving access to people around the globe that don't have access to financial markets, of the almost 8 billion human beings, more than 4 billion are either underbanked or unbanked. So if you look at the global applications, it's much bigger than the huge application that Larry Fink is implying.
Zoe Cruz is a Morgan Stanley veteran and also a board member of Ripple. Larry Fink, a little while back, said that the entire bond market was under transformation, that it's going to be tokenized, that tokenization of real-world assets is going to be a huge thing. Well, Zoe's telling you that's peanuts compared to what's going to happen as far as the unbanked, serving the unbanked. 1.4 billion people are unbanked. Imagine bringing them into the economy, but allowing them to buy equities, bonds, whatever, having a portfolio of financial assets, allow countries that were never included into the financial world, allowing them to import and export, allowing natural resources and labor. An inclusive economy is a prosperous economy. Wealthy doesn't mean having a lot of money. Money is not real. What is real is stuff, or gross domestic product. When GDP of the world increases, the entire world becomes more wealthier. Fiat is fake. All it does is measure how much stuff you can buy at any one given moment.
What Larry Fink is implying is really the Western world revolutionizing the way things are being done. Huge. But the much bigger revolution is the one that encompasses the world. So for me, when you actually eliminate intermediaries, if not eliminate them completely, you reduce the number of intermediaries. You actually have, and you give access, you increase liquidity at some point. This is the beginning. At some point, you increase liquidity. And in the Larry Fink definition, I can now have an asset through this tokenization process that I can use as a transaction, but as a collateral as well. So if I can use something as collateral, I increase its value. It's huge. On a scale of 1 to 10, we're at 2.
On a scale of 1 to 10, we're at a 2. Now, she talks about removing the middlemen. Now, the middlemen are the banks. Silicon Valley Bank was not an anomaly. What happened is collateral, the liabilities and assets no longer matched. And that's how they went under. Everybody started taking their money out of the bank, and they drastically lost money quickly. All of the banks are in the same position right now. Every single one of them. If you go to John Titus' Best Evidence YouTube page, he does the math and will show you that every single bank is in trouble right now. On top of that, they're looking to go from Basel III to Basel IV, which means that the banks need to take on even more collateral. So they need to buy more stuff that they don't have. So removing the middlemen is a very ugly process. And that's what we're doing. That's what's happening right now. The banks are failing. Middlemen are going away right now. And protocols, decentralized protocols, can replace them.
Let's talk about the Fed in terms of regulation. Because last week we saw the Basel III endgame, Basel IV, some people call it increasing capital standards for especially the largest banks.
Is there some way someone can actually quiet that group down over there? Okay. Yeah. Sorry.
Is that a metaphor for?
What? I don't know. Maybe we can. So
higher capital requirements for you all. What do you think is the overall impact from these new rules that have been proposed?
First of all, I just want to be blunt. It's hugely disappointing. I think these rules are I've always thought G-SIFI was a joke. Now we have operational risk capital, which I think is equally bad based on models, which kind of make no sense to me. And if I was the Fed, I'd be very careful about saying their models are perfect. Remember, their models didn't show inflation and they didn't show 5% interest rates and stuff like that. They lack transparency. I don't know what they want the outcome to be, but I think they should be saying, here's what we want the outcome to be. And it can't be just safe for banks. We have the best financial system in the world. I know there's a lot of calibration among, we have hundreds of rules, lots of, very little calibration among the rules. And it can have a real effect on, if they want to push all mortgages and all small business banking or banks, so be it. They should tell the American public that. And so and it'll have real effect on consumers. So I'm going to say just mortgages. The way that I've read it so far, and more detail to come, it's going to make it much harder to make a small mortgage and a mortgage to a lower FICO person.
I'm not a fan of banks or big banks, but Jamie Dimon's speech right here, while he's speaking, he's giving a middle finger to the bank regulators, and he's telling them that they're going to collapse the banks. And it's going to be really difficult for people on Main Street to get a loan. The small business person is not going to have a local bank. The requirements that they're adding are going to make it more and more difficult. On top of that, right, that's the whole idea, is centralizing all the banks for some type of CBDC system. That's what's in play, whether it be a plan or by accident or just over-regulation in general. That's what's happening. Now, if you think about the SEC hindering innovation, well, the bank regulators are just as dumb. They don't realize what they're doing. And all of this is lagging. The Fed has data that's old. And by the time it hits them, it's going to be too late. So what happens? Does the Fed bail out the entire banking industry? Because that's what's being set up right now. Big banks, huge banks are underwater, not to mention the euro-dollar market. There are no choices. They have to print. They just raised the debt ceiling. They're going to have to raise it again very soon. They have $1 trillion interest payment This is all coming to an end. And what are they going to do? They're going to do bailouts again? That was not favorable by the people. 80% of people disapproved of bailouts. You introduce that idea again, there's going to be problems. And listen, this technology is simultaneously being developed while banks are failing, right? So interesting timing.
To make it really concrete, I will take one example. So if we look at institutional real estate, about a $10 trillion business. Mm-hmm. The way that it works today, somebody, wants to do a project, $200 million project. They would go to a bank. The bank will maybe syndicate with two other banks. They will go to a few pension funds, and that's it. That's the market. Ticket sizes are big. You invest for 20 years. Once you invest, you forget about it. You just keep getting the, as the CEO told me, I can only sell to people who manage other people's money because there's very little liquidity and you just get the interest. And that was their market for a very long time. Once you start tokenizing, they can do a few things. First of all, they can have smaller tickets. They can have more fractional kind of ownership, and they can start distributing it to wealth management. So they can go to family offices, high net worth individuals, and so on, give them access to these products that until now were only available to pension funds. Then they can provide liquidity through over-the-counter ability to have to IOIs, like I want to sell a portion of it, I want to buy a portion of it. So it's not high frequency trading, but it is some trading. Currently, liquidity is 1% a year in this market. It could go to 5%, it could go to 10%. But that's nothing. What the most important thing is what Zoe mentioned before, is collaterability. Because suddenly, the bank can very easily come in and offer you a loan against this asset because it's tokenized. If you default, they can take the token rather than having to go to court and try to locate and find so it's a lot easier to offer collateral against it. And therefore, this asset that you used to have as a sitting for you for 20 years can start to be used and used for leverage.
Collaterability changes the game. You see, these illiquid markets are vast, and with tokenization and the innovation that DeFi has presented, like automated market makers and other technologies, it's changing the world we live in. There's a vast amount of wealth that just sits static. By tokenizing deeds to homes and mortgages, wealth that is normally not used can be turned into financial products. If someone defaults, the token is taken without lawyers or courts. Smart contracts will execute code. And that means illiquid assets have instant liquidity. Right now, Ripple, LoanSnap, and the Hong Kong Monetary Authority are discovering ways to collateralize real estate using tokens. We're just at the beginning. Before we continue the show, I'd like to take a moment to say thank you to my sponsor, the XX Foundation. The foundation has been a sponsor of this show for a few months now. Chris Larson is one of the early investors in XX. The purpose of the network is for quantum-resistant privacy. Privacy that cannot be broken and where people feel safe. I can't say much, but I'm excited about a recent development that we should hear about soon, so stay tuned.
So it's way too early to call winners and losers, to be dogmatic about anything. Bitcoin is going to the moon and Ethereum isn't. Whether KKR is going to win or BlackRock is going to win, whatever their tokenization process is. Way too early. There's one final point I will make. No matter what the application is, no matter what your specialty is that you want to excel in, talking to regulators around the world and to policymakers around the world, there are three things they will never negotiate away: investor protection, market manipulation, and AML KYC. No matter what company you are, if you follow those three things, you'll be very successful.
So we're really early to the game. Now, most real estate projects that you're thinking about, Proppy, Lofty, they've been on smart contract platforms. Ripple's working from the top-down type of approach, right? So that's how they won the Hong Kong Monetary Authority. Hong Kong is a large economy. And what's interesting to me is that the Hong Kong dollars are actually pegged to US dollars. So there's a peg to US dollar similar to like how Palau backs their dollar with US dollars. So they don't even have a dollar. They just use US dollars. So again, we have this platform that's testing out Hong Kong dollars, which are pegged to dollars. Now, Fubon Bank said that they tests will be carried out in the third quarter. So they're going to test first to be used for repayment customers. So their customers submit repayment applications through online banking. Ripple's technology tokenizes property liens and issues loans in Hong Kong dollars dedicated to this test, speeding up the process. After customers obtain loans, they can use relevant Hong Kong dollars in other payment test cases to promote digital Hong Kong dollars. And it looks like customers can also use Fubon's eHKD wallet to view real-time loan-to-value ratio, stress test, and property value and other information. He said, frankly, that he has not been able to quantify the actual time required, but it is expected that the entire loan disbursement process will be faster than traditional channels. However, this pilot program does not involve real issuance of digital Hong Kong dollars. If customers really want to increase their mortgage after completing the pilot program, Fubon will provide them with existing mortgage loan services and customers can apply again. So think about 2008 and what happened in 2008. Wall Street imploded the housing market by bundling up bad loans and selling them as if they were good loans. And the whole entire housing market cratered. Now, with this whole tokenization scheme, right, you will own nothing and like it, like the World Economic Forum has to say, right? If you're able to have the entire world take everything that they have of value and lever it, and then there's a systemic event that takes place and there's a big drop in volatility, the smart contract's just going to automatically scoop up the collateral.
It's early. And so what he sees is 5 years from now. I mean, in my world, I'm old enough to remember that big things happened every decade, but the world is changing very quickly. So the implication is there's a massive hill to climb before you have massive adoption. So when he says this is going to be a multi-trillion-dollar industry, he's talking about minimum 5 years from now. The path from here to there is not going to be a straight road. So one, I would say how quickly it gets adopted is how quickly and robustly the technology can handle the volume. Because in the non-narrow sense, when you look at the macro view of the world, the cryptocurrency world, there is a lot more demand for it than there is the underlying robustness of the infrastructure. So I think that will have the same curve, that the demand is there and there will be a point, I don't know whether it's 2 years or 3 years from now, where you will not think of a world that's in the old rails. It will be in the new rails. So that's what he's saying.
Zoe Cruz thinks in the next 5 or 2 to 3 years that we're not going to think about the old world. We're only going to think about the new world. And it's funny, markets look forward. They're forward looking. They see things before they happen, right? People want to invest and make money, so they do things in advance. Now, we don't know exactly how far we are. A lot of these projects are under wraps, and what's going to matter is what happens at scale. And when these financial applications are at scale, the demand for tokens is what's going to matter. Now, I don't even think we're have really started yet. I think there's more use cases to come that haven't even been discovered, and it's just going to evolve from here. However, there's going to be at least one big push where the utility coins will say, I'm not going to even specify which ones. You know the protocols, you've researched the projects, I'm assuming. The projects that have something going for them, right, at scale, you have to think about all of the demand for these coins. To do anything on these ledgers, you need the coin to do it. And these decentralized ledgers offer something unique. It takes value, puts it on the internet, collaterability, all the things that were discussed in this video. So we've just scratched the surface, and this is just started. But remember, markets are forward looking, and it's not going to go in a straight line. There's ups and downs along the way. Efficiency is doing things right. Effectiveness is doing the right things. Thanks, everyone. I hope you enjoyed the show. Please take a moment to like and subscribe. If you enjoy content like this, please consider joining my Patreon or my Ghost site, dmjr.ghost.io.